The Dow rebounds, so is this a crash or a correction? Anyone talking about Bill Shorten's negative gearing changes apparently are scaremongers, and AMP and ANZ in focus this morning. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, I've been saying that I think we're in a correction. I like the rebound on the Dow Jones tonight, or overnight. But what do you reckon?
Yeah, look, I think it's a correction, Peter. We've been saying that's what it looks like in the States. October, it's a tough month historically, statistically. They rally into the end of the month. That's the other thing that the data said last night. So, look, I mean, we've got midterms coming up next Tuesday, so we will get the results of those, I suppose, effectively Thursday. We'll see it in our market on Thursday, after the US has a chance to react to it, and also, you know, the trade stuff. So, look, they're the two negatives around. I'm not sure whether a good result for Trump in the midterms is a positive or a negative for the market. I can't work that out
yet. Not with this guy. He's too hard for me.
It's too hard, but there are some things. I mean, earnings seasons there has been okay. I mean, they've done better than they forecast. I think the worrying sign, or maybe the sign the market hasn't liked as much, of course, is some of the outlooks for the next quarter aren't as strong. But look, they're coming off some pretty rosy figures. So it's not there were a lot of analysis ahead of these results said a lot of CEOs might be toning estimates down. Yeah. And that's sort of what's happened. So I think look, uptrend still in the US. You've got to play this as a correction still.
Yeah, and I like the idea that the US economy is really growing strongly, and crashes don't generally come. The statistics show that they don't come when the economy is expanding quickly. When it's come off the boil, it could be, but it's expanding quickly at the moment, and I think that's a good sign. Let's go to this housing price scaremongering. I've been accused of being a scaremongerer, but I just got to say, Paul, if Labor's policy is to introduce restrictions on negative gearing to stop property investors competing with first home buyers and households, it seems to me the point of the exercise is to either slow down house price growth to make it easier for first home buyers and households, or even to bring them down after this big surge or boom. Is there anything irrational and scaremongering about that?
No, I don't think so. I mean, and look, I think the thing about this, you've got to remember, existing negative gearing will be grandfathered. So if anything, you can make an argument that perhaps property investors won't be as quick to
hang on
sell.
to it. Hang on to it.
That actually could be a little bit of a positive for the market. The problem is that new buyers won't come in. Yeah. So I think the big issue here for Labor, I mean, obviously the Liberals are going to go for this come what may. This is the big issue for one of the big issues for the next election. So expect a lot of scary talk from the coalition. Okay, the builders are against it. The big property developers, so they'll be supporting it. So people will be saying it'll have a big impact. I also think the question is how the transition applies. That is it a hard date or a soft date, and just exactly what it means. So I think there's going to be some transitionary impacts in the market which are negative. Longer term, it's a net negative. But look, there's going to be a lot of scary talk. But look, I don't think you can read it any other way. It can't be but a negative for the market. Right. The question is whether it's a big negative or a little negative, and how it plays out.
And we don't know, because all economic models on this will be based on assumptions. All I said from the outset was, this has to be good for home buyers and not good for home sellers, because less people will turn up to auctions and home showings when real estate agents put them on the market. And if you don't get good bids, or you don't get any bids at all, what's the agent going to say to the seller?
I'm sorry, you're going to have to drop your price.
Exactly.
So, that's the only way property works.
Yeah, that's right. Okay, let's go to ANZ that reported this morning, and you've done the readings.
Look, ANZ, how was it? Looks okay. It's better than the market expected. It's on a continuing basis. Forget the headline number. It's up profit of $6.5 billion roughly. The market was talking about 6.2. Yeah. The big item in the ANZ is the reduction in bad debts.
Yeah, I love that number.
And look, I think that's going to be the case in all the banks. We know there is no pressure out there. You know, despite all the
mortgage stress.
It's not showing up in the bank numbers.
No.
So bank profits are going to be supported by record low bad debts. The challenge the banks have, of course, is revenue. And that's the issue that ANZ faces. I like ANZ, or I have liked ANZ, because it's the most advanced on the cost-cutting side. So I think the banks are a story about cutting costs. And ANZ's is well down the track on that path. So I think the market's going to like this result. Interesting enough, the banks have been amongst the better performing sectors in one of the best performing sectors in October, as we predicted. And in the rally, as we've seen back the last 2 days, it's the top 20 stocks that are moving. So that's what often happens, you know.
Love the top 20.
When markets fall, they hit the majors hardest the first. They're the only things liquidity. When they bounce, the big stock bounced the hardest as well. So it works both ways.
Good news on ANZ. AMP. Good news AMP.
Well, AMP's under fire for selling its life insurance business too cheaply. There's some more noise about that.
Fund managers are cranky today.
These are fund managers who are long AMP shares, of course. You've seen the price.
That's why they're cranky.
That's why they're cranky. Look, I sort of my piece on Monday for those of our subscribers was, are you catching a falling knife with AMP?
Yeah.
You are, but I actually think AMP is sort of more in buyer territory, so I stuck my neck out. Yeah. But this story is going to go on a little while. There is a suggestion this morning that some of the fund managers are going to ask AMP to put this back to an EGM. Whether they've got the numbers, I'm not sure. The issue here is they've got out of life insurance. What AMP started as a life insurer back 169 years ago, they've sold that, and the question is, have they given it away? In other words, did they get enough price? There's also a question mark why they needed to sell. I didn't think that was necessarily the problem part of their business, but you know, it's all about simplification for the new AMP. And look, the analysts are a bit mixed on this. Analysts have basically felt it was a little bit cheap. They also feel the other thing you've got to be careful with AMP is a new CEO doesn't start till December. Typically, new CEOs come into a business, tend to rebase expectations. That means that they find things to sell and write off, you know. That's right. Set the bar low. So, you know, there's some downside with AMP. And the other thing, AMP's dividend is going to be cut. You're looking at sort of like 18 cents, 19 cents this year compared to 29 last year. So, you know, if you're doing your numbers, the dividend that will be announced for the full year when it reports in February will be lower than last year. So there are challenges with AMP, but I think that story's got more to play out, Pete.
Okay, I'm going to go over our time limit for one very important reason. An amusing story about new CEO. So an old CEO lost his job, the new one came in, and the new CEO, old CEO left 3 envelopes in a drawer, and he told the new CEO to go to the drawer and read them progressively as things develop. So he opened up the first one after his first reporting season, which was terrible, and the note said, blame the old CEO. So he went out and blamed himself. Then after the next reporting season, things still hadn't improved, so he went to the envelope again, and the old CEO had said to the new CEO, make sure you tell the market that you're introducing substantial changes and the marketing strategy will turn around the business, right? Okay, so he did.
Sounds like a form book.
That's right. That's right. And then the next reporting season, still things hadn't improved, so he went to the envelope and he read the note from the old CEO and it says, start writing out 3 new envelopes.
A goodie but an oldie.
A goodie but an oldie. I'm Peter Spencer.
I'm Paul Rickard.
And we're mad about money.
Content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.